Next up is Mark Baribeau, who is a managing director and also the head of global equity at Jennison Associates in the US. He'll be talking about growth investing, as well as the role of disruptive technology and innovation in global equity markets.
Thank you, Ray, for that introduction. And everyone, I'm glad to be here again this year, although not in person. But hopefully this segment is interesting because it's been a very interesting year in the financial market. So we'll get into that in a minute. If we go to the next slide, I want to show you a couple of things we're going to cover today. First, there's two big important trends that are winning in the markets this year. And it's a continuation of trend from the last few years, but the pandemic actually has in many cases accelerated fundamentals for these companies. And so that's what we're going to highlight today because it is intriguing. And then secondly, we're going to talk a little bit about disruptive models that we see developing in the markets today that we think could power very good returns over the next few years. So it's going to really be a two-part presentation. Focused on the here and now, and then a little bit about the outlook. So if we go to this key page, it's been an interesting year, right? It's very chaotic with the pandemic. Our work lives, our personal lives have all been turned upside down as everyone around the world has had to adjust to this. And through that chaos, though, there's been many companies that have actually flourished, and it's been amazing to us just looking at our portfolio returns for you, how we've sort of been able to manage through this in an unscathed way. It's quite surprising. But it's because of these two big trends we're going to talk about. They all revolve around the digital transformation of the global economy. And it's two pieces. One is the direct-to-consumer model that's been developing for a number of years that really has thrived during the pandemic. And we'll talk about that. The obvious direct-to-consumer applications are things like e-commerce, where you can get products and services to people very quickly, very, very efficiently, regardless of the conditions of the pandemic or in the face of store shutdowns and economy lockdowns, et cetera. So that's the obvious one. The less obvious is the omni-channel distribution. So great consumer brands today, consumer branded companies that are succeeding in this environment actually have direct-to-consumer models. They either sell to you online or in their own stores. But in either case, they control the inventory, they control the engagement, they control the transaction, and they know who you are and they know how to service you. Those companies actually are seeing very positive results this year, even in the face of very challenging circumstances. Thirdly, there's all sorts of technology applications that are facilitating transactions in this environment, like digital payments, that for obvious reasons have seen an acceleration in activity because, again, the framework there is very amenable to working in an environment where traditional ways of commerce have been disrupted. We also have unique technologies that are being developed on an omni-channel basis that, again, are enabling companies to power their way through this. It's a lot of heavy lifting on the technology front, and it involves everything from sales and marketing to website design to services leading to logistics, fulfillment, payments in multiple currencies, multiple forms of payments. How does a company deal with all that, particularly in the midst of a major disruption? Well, there's companies that are supplying that technology from start to finish that are really doing well in this environment. And then lastly, we're seeing the emergence of other models. We know about video, streaming video. We know about other services that we get directly from providers. But telemedicine, that's one of the new ones that's come out of the pandemic. It's been there before, not heavily utilized. And of course, when you couldn't get access to your physician, go to the doctor's office, you use telemedicine. Consumers love the experience. Insurance companies find it very efficient. Doctors find it efficient. The adoption rates are accelerating fairly dramatically. And in the post-pandemic world, we expect it to be one of these secular winners. Again, coming out of nowhere in this environment. So very interesting in this direct-to-consumer model. It's changing everything in terms of how we consume products and services, and the companies that are delivering it are the ones that are winning. Okay, the second big part of the digital transformation is the digital transformation of the enterprise, and that's both companies and governments. What does that mean? Well, for years now, we've seen this migration of data from the enterprise, it's stored in a server somewhere in your company, moving to the cloud. And the big cloud service providers like an Amazon AWS or Microsoft Azure, Alibaba Cloud, their cloud businesses are big, multi-billion-dollar businesses. They're growing in excess of 30% a year, very profitable. But what's really interesting now is the development of applications that sit on those cloud frameworks. So again, a migration of software from your company or on-premise to the cloud where you can tap into it instantly. The implementation is quick, it's more efficient. And so during the pandemic, when business continuity and all the disruption of work from home, when that hit, these cloud-based applications in many cases saw accelerated deployment because it was necessary. So a nice to have in the future became a must have for today to operate. And we're seeing it being pulled forward, this whole migration to cloud-based computing, pulled forward in a dramatic fashion. So the areas of focus we really like are things like unified communication. What does that mean? The ability to communicate with your end customer using voice, video, text, email, any form where it's on a singular platform where you can, again, know all the touch points of how you've communicated with your customer in a way that they prefer. And so that's very powerful. Could be in areas of security and identity authentication. Could be in areas of workflow automation. All of these areas are seeing really dramatic improvement in demand. And this is happening during a deep recession where normally you would expect these kinds of deployments to be delayed or deferred, not actually brought forward. So very powerful. So we're going to talk a little bit about these in more detail to get some interest here. Okay, so the four big trends that we're really invested in that we think are so important from an investment perspective is this on-demand consumption, this direct-to-consumer model. Digital payments, which help facilitate it. Enterprise technologies, which are, this big cloud migration, very important to get this right. And then disruptive mobility. It's the one part of the sort of the more disruptive part of the market going forward that still has a lot of unanswered questions because the pandemic has both helped companies and hurt them. But it's an interesting trend we're going to talk about. So let's go to e-commerce first. Some amazing statistics for you. We use the US in this chart as an example, but it's happening around the world. When we ended 2019, about 18% of sales in the US were done on e-commerce. So that's a nice penetration. It grows about 1.5% per year. This year, it looks like we could end up closer to 23%. So a 2-year pull forward of penetration rates, fairly dramatic. If I use company examples, you'll see what I mean. Amazon, for example, one of our biggest holdings, when we entered the year, we expected it to grow 20%. That's what it grew last year. By the second quarter, the growth rate had accelerated to 42%. It was literally, they were like consuming a fire hose of demand and couldn't even keep up. So a doubling of their growth and their $250 billion of annual sales, that type of scale, that type of increase is really unprecedented in our investment time. So really, really important trends that we think now lead to a higher foundation because people have started buying groceries online, things that they weren't doing before, even if they were active e-commerce shoppers. And we're seeing this trend globally. So if we look at Latin America, for example, emerging markets have a huge unmet need in this area. So we all know about China. Through August of this year, it looks like e-commerce sales as a percent of total goods and service sales will reach about 30% penetration. That's amazing, but China leads the world in e-commerce. But if you look at other areas like Southeast Asia and Latin America, both regions are very digitally native, very sophisticated internet infrastructure, but the consumers have low penetration rates of e-commerce. So Latin America jumped from 5 percentage point penetration to probably 7 this year, led by Brazil, which is going from 7 to 10. And importantly in Brazil, once you hit that 10% penetration rate of any major product or service in a market, you tend to go through the S-curve of adoption. And we're seeing that today. Very, very exciting. By the way, the leader in e-commerce in Latin America is Mercado Libre, which has been held in the portfolios for over 7 years. So we're really excited about how their business has developed in the wake of the pandemic because it's brought forward demand, penetration, use cases that will serve their customers and them very well for years to come. Okay. Let's look at the technology side of this. One of the more interesting companies out there is Shopify. You may not know it well, but if you're an entrepreneur starting a e-commerce operation, you want to sell direct to consumer, or if you're a big multinational branded company who's used to just selling to wholesale distributors like Tesco or Walmart or Woolworths, how do you go about selling direct to consumer? And we're talking basic things, like it could be some great apparel that you make, very fashionable. It could be that you sell on Instagram. It could be something like Heinz ketchup out of the UK, which is now sold directly to consumer from Heinz. How do they do it? They get Shopify. Shopify is a retail operating system for e-commerce. It also does omni-channel now distribution for companies as well. If you have stores, you use their technology in the store as well. They were growing about 45% a year. It's been one of our top performers last year and again this year. What's their secret sauce? They seem to be leading the market in providing all sorts of technology applications for companies who are selling direct to consumer. They exited the year growing about 47%. That's a really hefty growth rate. That's a high grower, one of the fastest growing companies in the world. By the way, they're big. If you add up all the sales of their customers, it would be the third largest e-commerce retailer in the United States, behind only Amazon and eBay, but ahead of Apple and Walmart. Very impressive. And so, long story short, you fast forward through the pandemic. In the second quarter of this year, Shopify's revenues grew 97%. Again, a doubling of its growth in just one quarter for a very large, successful technology platform. So we like to find these types of names that are aiding in the disruption of certain industries, because all they're doing is trying to solve for convenience for merchants who are trying to reach their customers. And by solving for convenience using technology, they're able to build a very big business themselves. So very, very interesting trend. Video streaming, you know this well, and I've talked to you about this before in prior years, but again, through the pandemic, we've seen that certain business models have been strengthened rather than weakened. Netflix is the global leader in streaming video. They actually invented the category. The majority of their subscribers and growth are now non-US. And they're reached 193 million subscribers by the end of June. And you can see from this chart, it's been very steady growth. And so it's a continuation of trend. It did actually accelerate in terms of net new subscribers in the first half of the year versus last year. Work from home means stuck at home. So of course we needed entertainment. And so that this is where the world turned for entertainment. But the other important element of it from a business model perspective is they're subscriber based. That's how they get paid. They don't get paid through advertising dollars. So as they grew subscribers through the pandemic, their revenues grew as well, and it enables them to spend more on content for next year and the year beyond to keep that strong network effect in place. More content leads to more subscribers leads to more revenue and the ability to generate more content for local markets. Very important strength. Their competitors who are advertising revenue based saw a steep decline in revenue because the ad markets was hit hard in the recession. Their business model weakened, Netflix business model strengthened, really good competitive moat there. That's what you look for in any successful investment. And again, the direct to consumer model playing a huge role. Okay, digital payments. This is what's greasing the skid for all this modern economy. Growing strongly double digits around the world, you can see from this chart. In China, in the US, in Europe, you're seeing the same trends. Latin America, by the way, is exploding in growth now with digital payments due to technology companies providing, again, convenience or unmet need to a group of consumers who don't have access to credit cards, started buying things online, needed a payments mechanism to do it, and are now using that payments platform to buy things offline, typically using a smartphone. So the biggest digital payments market in the world is China by far, but you're seeing this trend explode in growth in markets like India, in Indonesia, and in Brazil, all using unique local payments technology platforms, and we're participating in them across the world throughout the portfolio. And again, this has been one of the leading contributors to performance for us for the last 3 years, but particularly this year. Okay, the digital transformation of the enterprise. This is an interesting chart here. It just shows you where data is being stored. And the red line is the one I want you to look at, that's the cloud. And you can see it steadily rising. It overtook the consumer. It's about to overtake the enterprise. And cloud-based data will be the de facto standard in the industry over the next 5 years. So think about a $1.5 trillion information technology budget on the move, and it's migrating to the cloud. And the pandemic has accelerated the migration. The CEO of Microsoft has said it's moved forward penetration of the cloud by 2 years. So very, very important trend. If you're investing in tech, this is the single most important element to look at for the next 3 to 5 years, because you're talking about moving from 20% penetration of a $1.5 trillion IT budget to over 50% in perhaps just 2 years. So it's going to be dynamic growth. What's going on in tech in general is kind of interesting. So if you look at the light blue line on this chart on the left, you can see technology spending as a share of total capital spending continues to rise on a secular basis. So no new trend there. On the right-hand side, you see that software, though, is grabbing now almost the majority of spending, second only to research and development. So if you look at our portfolio structures, they've also followed this migration pattern. And it's very software centric. We have very little hardware, quote unquote, investments in the portfolio. It's really software and services because that's where the growth is. When you think about every major cycle we've been through in technology, you have this rising secular trend, but it's always different things. It starts with, in the 90s, you had the move to desktop computing, personal computing, then connected computing and the internet. And from the internet, you went to the smartphone and the mobile internet. And now we're going into the cloud-based application period. And this is going to be one of the most dynamic ones we see. Okay, the last part of the presentation, what's getting disrupted now in the marketplace that's sort of off the e-com and tech-centric view of the world, disruptive mobility. Okay, that comes in many, many components. So the auto industry is facing an unprecedented level of disruption. You have the move to electrification from combustion engine. You have the move to shared mobility like Uber and Lyft, away from ownership. You have the move to autonomous driving from self-driving. All three of those shifts are tectonic. The one that's moving the fastest today is the move to electrification. Shared mobility took a hit during the pandemic because people aren't commuting as much. They're not going out to bars and restaurants as much. So demand has dropped on a cyclical basis. It'll obviously recover when the pandemic ends. Autonomous driving is taking years to develop. The leaders are Tesla and perhaps Google. We don't know yet. But in electrification, we have a clear winner. It's Tesla. You can see from this chart, Tesla has 3 of the top 10 slots in terms of demand. And of course, the Model 3 dwarfs everybody else. The Model Y, which is their small SUV, similar price point to the Model 3, which is on the market today, next year will show up on this chart as well as probably number 1. So Tesla's been an interesting stock this year. It's finally gone through what we would call the discovery phase. While we've owned it for 7 years, it's been a sort of a steady and choppy ride, no pun intended. But this year it's been explosive. Why? Well, if you look at the first half of this year, Tesla's sales are up double-digit versus a year ago. The industry is down strongly double-digit. Most major OEMs down 30, 40% year over year. So the consumers in the middle of the worst recession in a long time, in terms of quarterly GDP, the worst since the Depression, were waiting in line to buy Teslas. That's an important element there. To us, it signals that this is the most important consumer product to come along since the iPhone in 2007. So we're taking it very seriously. And when you look at the company and you look at anything that's disruptive, it's very easy to dismiss a really strong stock move and saying, well, it's overvalued, there's a lot of speculation. But let's take a step back. Tesla's production plans are very aggressive over the next few years as they build their second Chinese facility. They're building a new facility in Berlin to manufacture. They'll be building a new facility in the US to extend manufacturing capacity. As a result of all this capacity expansion, the company will either go up 2.5 times or triple in size, conservatively, between 2020 and 2024. So it'll go from roughly 30 billion of revenue to either 75 billion in revenue or 95 billion in revenue. We're not sure yet which. Depends on demand for their pickup truck, their Cybertruck, which looks like it's going to be a big winner based on orders. But even if we take a conservative approach, the company's going to go up by 2.5-fold in size. It's already very profitable and generates free cash flow because electric vehicles are cheaper to make than a combustion vehicle. So when we discount those earnings forecasts back, we think the stock's selling at a roughly 30 times 2024 earnings. It looks pretty attractive to us. But we know there's a lot of optionality along the way as they continue to develop the demand for electric vehicles. So this is probably the greatest example today in the marketplace of something that is in now the early days of disrupting an industry. You have a clear leader, and it could be one of those companies that we look back 4 years from now and say, wow, why wasn't this a bigger position in everybody's portfolios? Because it's one of those rare global disruptors that comes along. So with that, I'm going to end the presentation. I want to thank you again for listening to this. Hopefully next year we get to do this in person again in London. It's one of my favorite presentations of the year. And thank you very much for participating in this video today.